Greetings, everyone. It's another episode of the Giant Markets. I welcome you all. For today, we're going to look up on the technical side of the forex market. I want to show you how to trade the forex markets by using a candlestick called the doji. So as you all know, and even to all those who don't know, that the forex market compromises of two elements: the technical side and the fundamental side. So today I wanna get even more deeper on the technical side so that you may be able to read the charts of the forex market. So a doji is a candlestick which is characterized by a cross shape. For as you can see, this candlestick, it happens when a forex pair opens and closes at the same time, leaving a small or non-existing body. So as you can see, the doji is more of a, it comes in so many different types, but I want to explain a little bit about the doji only, and later I'll go into other types of dojis. So the whole exhibition of it has an upper and a lower wings of equal length. So that's all about the doji that you have to understand about it mostly, because when you are reading the charts of the forex, what you have to know is that the forex chart, it comprises of so many different candlesticks, and the doji, it's a very important candlestick that you have to know and understand, so that when you are reading the charts, everything gets easy for you, so that you may be familiar with the activity of what is actually happening at the moment and what is going to happen at the coming moments. So don't represent indecisions in the market, but can also indicate the slowing momentum of an existing trend. So whenever you see a doji, know that there is the momentum of whether you're going off of the trend which is going up or of a trend that is going down. It's now slowing, because a doji, it's one of those candles that will be telling you that now at this present moment there's about a turnaround is about to happen. Because there is no one who is now in charge of the market. So it's like no one is in control of the market between the buyers and the sellers, meaning either bulls no bears are in control of that market at that moment. So the doji provides to a forex trader with a reflection of what is actually happening at the moment. So if you are a forex trader and you are trading, you see a doji appearing at that present moment, it makes you understand, it makes you to be in a proper position to know that, okay, fine, this is the decision that I have to take at the moment. Whether you are in a trade, you now have an idea of, okay, fine, now the momentum of the buyers is now slowed down, so I have to go out of the trade, or I have to prepare myself to enter into a trade that is now going to come at that moment. So if the market is trending upwards when the doji pattern appears, this could be viewed as an indication that buying momentum is slowing down and selling momentum is starting to pick up at that moment. So traders view this as a signal to the extent of an existing long trade. So which means when you see a doji, this is one of the candlesticks that anyone who is a trader has to understand it so clear, because it's very important. It is important to consider this candle formation in conjunction with technical indicators in your particular strategy. So what you have to know about this doji is that even by seeing a doji appearing in a forex market, it doesn't necessarily mean that the trend can now change at that moment. No, but you need other technical technical measures that will help you also to prove that this doji is now this doji is now changing the market, like using the trend line, like using the Fibonacci. Those are the other things that will help you to understand that this doji, what it's saying to you, is it the truth, or there's something that is actually going to happen that is different. So traders should always exit such trend if they are confident that the indicators is, or if the indicator is saying what it's actually saying, or other exit strategies confirms what the doji is actually saying. So conducting a thorough analysis before exiting a position is very important to every trader, because the market can be undecided for that moment, but decides to continue or go in the direction of the trend. So that's what you have to understand as a trader, is that the doji is not always what it says, because a market is driven by so many things, so many technical things that are happening. So whenever you see a doji, it's not that you have to be so alarmed and say, now I have to remove, I have to go out of the trend. No, that's not how it happens. So, but you have to use other technical. So that's my advice to you: use other technical indicators so that you may be able to say, okay, this doji is correct at this moment or is wrong, because maybe the trend is still continuing down or the trend is still continuing up, but because you saw a doji and you just had to be you just fear had to take over you, which is something that you should not use when you are trading. So your emotions should not actually be take you to a level that will make you have a lot of mistakes. So yeah, that's it all about the doji at the present moment, because like I said, there are different types of dojis. So apart of the doji candlestick, highlighting there are other variations of the dojis that can be found when we are looking at the doji, because the thing that you have, any trader that has to understand, is the formation of a doji. So the formation of a doji comes in so many different ways, and these variations tell a different story, which means if you are a trader, you have to understand, okay, which is this type of a doji, or which type of a doji has appeared at the moment. Is it making the trend to go up, or is it making the trend to go down? What is this doji talking about? So let me tell you about the other dojis that are available that you have to understand at that present moment. So which means there are other different types of doji. So I'll only stick to 5 different types of dojis that are available. So as you can see, there is the doji star, which is characterized by the same opening and the closing price, where the opening and the closing are in the same, they are the same. There's no difference of what would have happened on that day. And but the small equal length upper and lower wings, so the upper and the lower wings, they are of the small equal length, which means it's the high and the low. Then we have the long legged doji, and it's characterized by an extended upper wing, extended lower wing, and greater volatility. So whenever you see a long upper wings and a long lower wings, but with equal open and close, which means this is a long legged doji, and it's volatile because of the high of the big wings, which are the highs and the low. Then we have the dragon doji, which is characterized by which appears at the bottom of a downtrend, where the opening and the close, they are also the same, but it so shows the rejection of the lower price. It's a bullish signal. As you can see, it has only a lower wick, but it doesn't have any wick in the upper side. So this one, it's a bullish signal doji. So we're calling it a dragonfly doji. So with the other doji that we have is a gravestone doji, which appears at the top of an uptrend. This gravestone doji, it has a long high wick, but it doesn't have a lower wick. So the opening and the close, they are also on the same side, and it shows the rejection of the higher prices. So this one, it happens to the as a bearish signal. Then we have the 4 price doji. The 4 price doji, it's a horizontal line. It's a horizontal line where the lower and there is no low, there is no high, but it's only the opening and the close. So everything is just intact in one place, where the low and the high and the low, the opening and close are all at the same level. Unique pattern signal indecision and low volatility. So whenever this one appears, know that the market is having a low volatility, and it's a sign that the opening and the close, they are at the same place, and the high and the low, they are at the same place. So these are the other donjis that are very important for any trader who's trading, who has seen a donji appear in the market. They should understand these things, and it gives you a clue and an idea of where the market is actually going at that present time. So this is all about the donji to every trader. So now the next segment that I'm about to go to is the giant news. So as giants, these are the news that are actually happening, because any giant has to be informed about the news that is currently happening all over the world. So we go to South Africa. The South African rand fell a weekend actually on Thursday last week afternoon trade, as the market analysts digested the news that the President Cyril Ramaphosa may be impeached following a panel of experts findings against him. So this news brought a lot of a downfall to the South African rand, because there are some certain political things that are happening in the South African country. We don't want to be so political, but what I have to tell is that whenever politics play a role in the forex market, if things are not going okay politically for a country, it means it's a weakness to the currency of that country. So the rand had to fall a lot. It had to fall around 3% on that day, because of 3% because of the news that Cyril Ramaphosa was going to resign from his office. So this one it was the worst. They say it was the worst day since early May, that's 2022 this year. So the rand was trading around 17 rand 56 to the US dollar, and 21 rand to the euro. So it was a big margin of falling on that day. So yeah, so politics play a serious role. That's what you have to know. Like, the market, I said, is driven by the technical and the fundamental. So we're not talking about the news. These are the fundamentals, the things that even drives the market also. So on the other news is that Beijing has announced that it will remove COVID testing equipments for almost public places, seen as a huge step towards the exiting the COVID zone policy. Because what is happening in Beijing is that whenever they found one person with COVID, the whole country, the whole city has to be closed, and that was actually affecting the whole country as a whole in terms of production, in terms of the economy. So the Chinese economy was not performing very well in these days because of this thing of COVID. So now they've discovered that this thing is affecting them. So even if they find one person, they will only have to deal with that one person, but the country has to go forward in terms of everything. So this thing was affecting even companies like Telsa, who have their plants in Beijing, because Telsa, even as I'm talking, their stock price had to fall because of the things that are actually happening in China, because China is one of the biggest markets for Telsa. So now that they've come up with a new policy when it comes to the COVID thing, it's a boost to the economy and to other companies that also have a good stock in those cities. And on the other news, the price of Bitcoin and other and cryptocurrencies are falling along with riskier assets amid term about the US economy uncertainty. There is a serious uncertainty of the economy of US, as we know that there is a recession that is bound to happen. So we don't know whether this recession is started or it's already happening, but they are saying there will be a recession in the next year, in 2023. So which is causing the Bitcoin also to go down in terms of value. It's not appreciating at the moment because of such news. So yeah, and a lot of even other cryptocurrencies, they are not gaining at the moment, and a lot of companies, their stock prices are also going down because of this news of recession. So even the Federal Reserve of United States of America, they want to increase their interest rate by 50 basis points. That's what the rumors are saying at the moment, because of this recession that is about to happen. So they want to at least calm down the inflation that is already hitting a lot of European countries. So it's rumored that the Fed will increase the interest rate by 50 basis points so that it can strengthen the US dollar. So yeah, this is the news that is actually happening at the present moment. So as a giant in the marketplace, I want now to come to the point, to this phase of explaining the terminology of the day. So as a giant, you have to understand the terms of the economy, of the economics terms. So now let's get to the lingo of the day. The giants dialect of the day today, we want to talk about the word sell, the word sell, the word sell. So it is a transaction between two or more parties in which goods and services are exchanged for money and other services. So in the financial market, a sale is an agreement between a buyer and the seller involving the price of a security and its delivery for agreed upon compensation. So a sale is a lot of people, they know about sale, because sale, it happens a lot. We see a lot of sale. It can be a sale or it can be sales. When you are dealing with the balance sheet, it comes out as sales. And there are sales people. A sale comes in so many different ways because it's a transaction between two or more parties. So whenever there's exchange of something, that's a sale. That's what we call a sale. So when you're calculating in the balance sheets, it's the sales that would have happened for that day, for that month, for that year, for the 10 years, you understand? So sale is one of the most important words in the economy or in the marketplace, because that's why a lot of people, they even call themselves that I'm a salesperson, which means he's the one who is behind the exchange of when people want to buy anything. So sale is very important. It's a word that everyone needs to master, because you can even call yourself a salesperson, and a salesperson is one of the most paid people in this world. So we have to have an understanding of what a sale is and go deep about it. It's a deep word in the marketplace. So today we wanted to just define it so that everyone can have an understanding of what a sale is. So thank you very much, everyone, for listening to this podcast. Hope it had to help you in so many different ways. So let us be people who understand what we are actually doing when we're talking about the marketplace. So with the markets, so that when we go into the markets, we have a better knowledge of what is actually happening, and so that the market is driven by knowledge. So that when we have knowledge, we will not suffer in terms of understanding how everything is happening. So anyway, my name is Dalubushe. I'm signing out. Peace.